Okay, good afternoon, everybody. On behalf of GBTA, in conjunction with the Arabian travel market, I'm delighted to welcome you to the GBTA section of the conference entitled Ready.Safe.Travel. My name is Chris Powney, and it's my pleasure to moderate this session entitled We Are Ready, and more importantly, to introduce you to the comments and fascinating insight from three fantastic industry leaders who are going to help us understand where we are in terms of travel, particularly corporate travel right now, and the impact of corporate travel and the restart to the macro economy, particularly with a view on what's happening here in the Middle East. Just before we start, a quick housekeeping point, and it's kind of, I'm sure everybody's very familiar with Zoom by now, a year or so into this, but we would ask you that if you do have any questions as you go through, to pop them in the Q&A box, and we'll do our very best to answer all the questions that come in to our fantastic speakers towards the end of the presentation. We've got, this is session number 1 of 4 sessions that are happening today. As I mentioned, the one today is entitled We Are Ready. We have one a little bit later on entitled We Are Safe, which, as the name suggests, is really looking at traveller safety and security and what impacts we see, particularly in the Middle Eastern region. We then have a session at 4 p.m, also moderated by myself, where we have a number of travel buyers based in this region who are going to be talking about what they do in this region and particularly how they manage travel regionally in the Middle East, but within a global context. And then last but not least is a session really focused and dedicated on meetings. So without any further ado, I'd very much like to get started today on our session entitled We Are Ready. So essentially, things we're going to consider today, this is very much a kind of big picture item, and we're going to be introducing you to Catherine from GBTA, who's going to be talking about their business travel index and really having a look at some of those numbers which exist throughout this region. We're also going to be hearing a little bit later from CAPA, Centre for Aviation, who again are going to be giving us their perspective. And then lastly, a little bit closer to home in this region, we're going to be going over to and considering the impact on Ras Al Khaimah. So without any further ado, I'd very much to hand over to Catherine Logan at GBTA to take you through the Business Travel Index. Catherine, over to you.
Oh, thank you very much, Chris. And thank you, everybody, for attending today. So as Chris says, over the next few minutes, I'm going to give you an overview of where business travel was before the pandemic, what impact the pandemic had, and how we forecast the return to travel. And I'm going to be using one main source for this overview. It's our GBTA business travel, our BTI business travel outlook. And what that is, it's an annual report that collates masses of economic analysis and forecasts from across the globe, and then uses these to predict levels of business travel spend. So if we sort of think about where we were in 2019, as you can see, global business travel spend equaled $1.43 trillion. And, you know, included in this, what we use to calculate this figure, or what we include in this figure, is all expenditure related to business travel, you know, be it transport, accommodation, meals, and even retail while on a business trip. And, you know, as you can see from this chart, the largest proportion of business travel spend was actually in APAC, which accounted for 43% of overall business travel spend globally. And just to be clear, whenever we allocate the business travel spend, it's according to where the budget is coming from. So if I travel from Europe to China and I go daft spending money on business trips, as I frequently do, all that money will be allocated to Europe. So, you know, in terms of that figure for Europe, Europe is actually the second largest, in terms of region, the second largest region for business travel spend at 27% of the global figure, followed by NORAM at 24%, LATAM at 3%, and then Middle East and Africa at 2%. And, you know, and while 2019 was our highest year globally for business travel spend in terms of year-on-year, you know, but in terms of year-on-year growth, it was actually business travel starting to abate. You know, between 2000 and 2019, there was an annual compound annual growth rate of 4.16%. But from 2018 to 2019, it was only 1.5%, you know, and there were a number of reasons for that. You know, the decline in oil prices, the sort of growth in protectionism. We're all starting to constrain global business travel, and so hence a slightly lower growth rate. So if we look at the pandemic, you know, on the impact it had, you know, we base a lot of these figures on economic forecasts, and you know, and so we need to look first of all what the economic impact of the pandemic was, and this shows the estimated impact on global GDP in 2020 was like a contraction of 4.4%, and that equates to $3.94 trillion in economic output. And you know, you kind of go, okay, well, that was, you know, it was a significant year, you know, once in a century event. You know, of course, it's going to have a big impact. But I can remember in 2013, whenever we first started doing the BTI, our head of research was talking about that 0.5% impact in 2009. And he spoke for like 5 to 10 minutes on how significant this was. And, you know, in terms of this forecast, we expect the pandemic to be 9 times more significant than that. And I did a little bit of research, so I'm going, oh, right, well, you know, I wonder, you know, when else there's been a similar or comparable impact. And the only thing in the last century that had a greater impact was the end of World War II. And apart from that, the only other thing that came close were the Great Depression following the Wall Street crash, and also the impact of World War I. So, you know, this is, you know, it's obviously a very, very significant economic impact. However, the good news is that in 2021, despite the fact that we're still feeling the impact of the pandemic, we are expecting to see 5% growth in GDP. So we are expecting to see, you know, it's like a good solid rebound. Now, you know, with this pandemic, as we've seen, you know, it doesn't affect the same regions at the same time. And certainly in terms of economies, the impact by sector varies hugely. So unsurprisingly, leisure and hospitality, as well as trade and transport, construction and manufacturing took a disproportionate hit, while other, you know, sectors of the economy, such as information, finance, and real estate, were scarcely impacted. You know, and it's not rocket science to try and understand why this happened. You know, as governments across the world intervened to restrict the transmission of the disease, so the industries that relied on that in-person delivery or experience were decimated. And there are, of course, exceptions to these restrictions. You know, for instance, healthcare workers or industries that, you know, my term would be, they keep the lights on. You know, so utilities. You know, the impact of them closing down are so significant, it can't be allowed to happen. Or, you know, for instance, media. So if somebody's reporting on a story, they need to be where the story is happening, and that's regarded also as a key service. So as we, you know, in terms of business travel spend, globally, 2020 saw a 51.5% contraction in global business travel spend. Now, this figure would actually have been a lot worse if it hadn't been for a very strong quarter in first quarter in 2020. And, you know, in terms of, you know, the regional impact in terms of business travel spend, it wasn't uniform globally either. You know, the worst impacted countries globally were the UK at 61.7%, the US at 61.1%, and Germany at 60.9%. And sort of, whenever I say the worst, these are of the top business travel spending markets worldwide. Interestingly, the least impacted was China at 38%. But this, you know, there are a couple of things at play here. Firstly, it's a function of the trajectory that the country was already on in terms of growth in business travel spend. There's a, you know, very high level of domestic travel, and also, you know, the effectiveness they had in terms of controlling the pandemic, and the way in which they're able to isolate it, you know, and do very, very strong, impactful lockdowns in certain cities. And I watched a McKinsey webinar at the end of sort of around September time last year, and they were saying that flights in July 2020 in China were actually exceeding 2019 levels. So as we look to, when we think business travel spend is going to come back, according to our forecast, we don't expect to see pre-pandemic levels of business travel spend until 2024 at the earliest. We're expecting to see a 37.6% growth in 2021, followed by 21.2% growth in 2022. And we think that then the rate of growth will start to reduce to 11.4% in 2023 and 8.6% in 2024, which will get us to around where we were in 2019. But, a bit like, the impact on it and the rates of growth, where that growth is coming from is not going to be evenly distributed. We're expecting to see compound annual growth rate of more than 5% between 2019 and 2024 in China, in Turkey, and South Africa, and also positive growth in the likes of India, Argentina, and Mexico. While traditional markets, big business travel spend markets such as the US, most of Europe, and North America are not going to be reaching 2019 levels by 2024. So that's, so there's like a disproportion in terms of where that growth's coming from. And if we look at the top 20 business travel markets, according to spend, now, and to put this into context, these markets account for 85% of global business travel spend. You can really start to see where the shifts in the rate of growth are. So for instance, in 2019, China's business travel spend was 22% more than the US. It overtook the US, I think it was around 2013, 2014. So it's now, it was just under a quarter more of business travel spend than the US in 2019. By 2024, we're anticipating it will be 2.3 times the size, more than double that of the US, with showing an annual average growth rate of 21.8%. Now, if you look at these top business travel markets, the only ones to show growth, as in a higher level of business travel spend in 2019 or in 2024 versus 2019, are India and Indonesia. So that's where a lot of the growth is coming from. And the likes of Canada, Brazil, and the Netherlands are very close. They're near the same level. But others such as the US, the UK, Germany, and particularly Russia are clearly more significantly impacted. Although we do anticipate by 2025, 2026, many of these countries will be at 2019 levels. Moving on to the Middle East and Africa. In 2019, the Middle East and Africa region accounted for $27 billion worth of business travel spend. There was strong growth in Egypt at 12.6% and slower growth in Kuwait, Qatar, Bahrain, Saudi, and the Emirates as the oil prices fell. And in terms of what we're expecting to see, post-pandemic and that recovery, just to say, business travel spend in Saudi in 2019 accounted for 2.6 billion. Israel was 3.3 billion. Egypt was 1.8 billion, and the United Arab Emirates were 2.4 billion. But the impact of the pandemic has been felt, quite sharply across the region. Not necessarily at the same level as UK, US, Germany. The most impacted we can see is the United Arab Emirates, with a 57.9% contraction in business travel spend, with Saudi Arabia, Bahrain, Kuwait, Jordan, Iran, and Israel all around the 40% mark, and Qatar was at 25%. By 2024, all countries in the region are expected to have exceeded 2019 business travel spend levels. So like a strong rebound, apart from the UAE, but they're pretty close. It's not a million miles off, and I imagine by 2025 will certainly be at post or pre-pandemic levels. And as we can see in this, we're particularly strong growth in Qatar, Iran, and Egypt. So that is just a whistle-stop tour of a lot of graphs, a lot of stats. But I think you can see that how I would sum this up as the pandemic has had a significant impact. We're expecting to see good economic rebound over the next couple of years. a lot of what's happening in terms of trends and business travel spend, or what's going to happen coming out of the pandemic, is very much reflects the trends that we're going into the pandemic. And so I'm now going to hand over to Derek from CAPA, who will give more of an aviation focused overview in terms of what's happening. Derek, over to you.
Hi, Catherine, and hi, everyone. Thank you very much for the invitation to join you today. Yes, I'm Derek Sadubin, Managing Director at CAPA. I've been with the company for over 20 years, and I've seen quite a few crises along the way. And I think this one really is the big one. I've got some data to share with you. We've polled our CAPA database last month, and these people really represent the industry, airlines, airports, suppliers, really quite a switched on group. And, we're if you could jump to that first slide, Catherine, 1/3 of them, when we polled them, expect aviation and travel activity worldwide to have recovered to 2019 levels by the end of next year. Whether you call them the optimists or the realists, or not quite sure. I don't put myself in that group. I think, along with Catherine, that we're going to see a slight delay in that recovery to pre-pandemic levels. 2/3 of the audience that we polled expect it to come sometime after 2022. So, almost 1/3 expected 2023, a quarter expecting in 2024 that we'll get back, and 8%, maybe we'll call them the pessimists, would be expecting it in 2025 or later. Of course, this will be patchy, and it'll be depending on the region, but clearly a profound impact on our industry. And we just hope that we're seeing some recovery now, and that process is more rapid than and perhaps we are anticipating. The next slide, thanks, Catherine, shows what percentage of the pre-pandemic short-haul business travel demand would come back and when. And it's fairly even spread, and about just over 1/3 of our respondents said they expect 41 to 60%, or about half, really, the levels to be back next year. A bit over a quarter expecting a slightly better return on that for next year. About 20%, so 2 in 5 expecting just 20 to 40% of short haul to come back. And Catherine, on the next slide, we see that 20 to 40% level jump up, and this is long haul. And I think clearly there are some more structural issues to face in the recovery of long haul business travel. 1/3 expecting it to be around about half of the 2019 levels next year. But look, we'll see. Obviously, we've got some good recovery going on in the China market. The US appears to be coming off its lows now in the corporate space. And there are markets like Australia, where I'm based, that's certainly had some improvement over the last couple of months. The next slide, Catherine, shows a question around just physical well-being, which is really important for the road warriors and the corporate travel managers, and just how safe will it be going forward. And the vast majority of our respondents believe that travel is extremely safe, so long as everyone adheres to preventative solutions, that is, I guess, mask wearing, social distancing, or physical distancing where possible. So I think the majority of people feel safe to travel. And Catherine, the next slide focuses on mental well-being, and I guess everyone's expecting travel to be more complex and perhaps be more stressful than it was. And that's an opportunity, I think, for service providers, airports, airlines, hotels, etc., to sort of get that right and reduce that friction, reduce that stress that travellers are going to feel, particularly on that first journey. Getting people back in the air or back travelling that first time and making sure that that's as painless experience as possible, I think is a really important thing for our industry. Yeah, so I think that's really a quick snapshot of some of the viewpoints of the Kappa audience, and I believe Ayad is here from Ras Al Khaimah and is with the Tourism Development Authority. So I might hand over to Ayad.
Thank you, Derek. Thank you. Good afternoon. Thank you for having me today. It's a great pleasure to be with Derek, Catherine, and Chris. I wanna talk today about how we, as a destination, reacted and pivoted to meet the needs of this new world. So as we entered 2020, we anticipated an exciting new year ahead. We as a country, we were looking forward to host Expo 2020. In Ras Al Khaimah, we continued on our path as one of the fastest growing destinations, tourism destinations in the region, ready to welcome over 1 million tourists. However, things did not go according to plan. It's fair to say that no one was prepared for a situation where global travel was put on hold. In Ras Al Khaimah, we needed to adapt really quickly. We had to get closer to our partners and make real-time decisions. This led to a series of initiatives from April 2020 onward. Next slide, please, Catherine. So in the UAE, we went into a full lockdown back in April 2020, and slowly opened up services, schools, as well as businesses, to where we are today, open to visitors. In response to COVID-19 pandemic, UAE ranked within the top 10 countries worldwide with the best leadership during this crisis. UAE also surged the top of the vaccination race, with the authorities ensuring that vaccine is available, delivered, and free of charge to everyone. Today, around 72% of the population of the UAE are vaccinated with both doses. Next slide, please. So I'll take you through the strategic initiatives that we took starting April 2020 till today, while we're sharing our story with you. So the next slide will explain. Next slide, please, Catherine. So then here we'll explain to you the initiatives and incentives that we took, like in every destination. Hotels and attractions were hit severely with the pandemic in late March into April. Here in Ras Al Khaimah, we became the first destination or the first city in the world to introduce a tourism incentive and stimulus package. The aim of this initiative is to help the tourism sector that were facing economic hardships. The second, please. So to bring tourism back and restore consumer confidence with the needed and right safety measures in place in our hotels and even our attractions, we are proud to be the first city in the world to receive both Bureau Veritas Safeguard Assurance Label and the World Travel and Tourism Council WTTC Safe Travel stamp. This meant that our destination was, and still of course is, certified as safe, including all our 46 hotels, our convention center, Al Hamra International Exhibition and Conference Center, and the world's longest zip line on Jebel Jais at the mountain peak in Ras Al Khaimah were certified. So we were quite ready by by end of April, beginning of May, to welcome tourists back to our destination. If you don't mind, the next slide, please. So our visitor profile also shifted with the pandemic, and this was expected. So typically, international visitors make the majority of guests to Ras Al Khaimah at around 70%. As all our key markets from Russia to UK to Germany and even the CIS and India here in the region were still at a standstill, we needed to quickly pivot and reassess our local market, which was just right at our doorstep. So while the staycation was already popular in UAE as Ras Al Khaimah, a very popular destination for staycations, we needed to amplify this concept with a clear and straightforward offer. This took the form of Shortcation, one of the very few summer campaigns launched globally for the domestic market back then. And this led to around 15,000 rooms booked within 12 weeks period. And this is the period between June and August 2020. And 65 million total social media impressions, and drove a very high average daily rate. Next slide, please. So we continued putting together meaningful offers with other promotions that provide genuine value for our visitors, including our winter campaign, Wonderful. It was available for both domestic and international markets. Opened one, and by then the open markets were only the CIS, Russia, Ukraine, and Kazakhstan to UAE. And Live Rack Play. It's to promote working remotely, working from distance. So it supports the remote working and digital nomad with a long stay offer of a year, but it can start from 1 month and above. Next slide, please, Catherine. So in partnership with RAK Hospital, we were the first destination globally to offer free return PCR testing. So any guest staying in Ras Al Khaimah for 2 nights and above will receive a free return PCR to their home country. And this is an initiative we started back in November, and it continues till today. This is another example as well of an economic support to our sector, the hospitality sector and partners. Next, please, if you don't mind. So since the onset of the pandemic, we saw limited numbers of flights coming into the UAE. And I always enjoy this example and give it. We always had pre-pandemic, between UAE and Russia as countries, we had 40 direct flights a day. Back in October, when flying resumed between 2 countries, we started with 12 weekly flights. So you can imagine the difference between what we used to have, and they're all landing in Dubai airport. So we took this opportunity to bring in as many flights as possible into Ras Al Khaimah with our partnership with RAK Airport. We knew that we would never bring the tourists to Ras Al Khaimah unless we re-energize our aviation collaborations, focus on Russia and the CIS market, as they were the only markets open to travel back then, while the UK, Germany, and most of Europe being closed. This resulted to having around 10 weekly flights from Russia to Ras Al Khaimah, 8 weekly flights between Kazakhstan and Ras Al Khaimah, 1 weekly flight between Czech Republic and Ras Al Khaimah, and next June we'll be starting. Ukraine Airline will start 2 weekly flights from Kiev to Ras Al Khaimah directly. Next slide, next slide. Thank you. So, like all tourism destinations around the world, Ras Al Khaimah has seen the significant impact on the pandemic on its tourism numbers. Tourism dropped almost 28%, but when compared to globally, the tourism industry dipped over 74%. And this is an example we always like to say that, while everyone done bad, we've done bad a little bit better. So going down 28%, I think compared to others, we were definitely blessed. We were definitely blessed with the domestic market and with the markets that opened and the strategies that we took in terms of connectivity. If you don't mind, the next slide. During ATM last week, we've announced a substantial capital investment program, including $500 million, which is around $136 million invested in capital projects, 20 new projects across Jebel Jais, Marjan Island, and Al Hamra, and more to come as well. To name a few, we have the Alpine Coastal Eco Lodge by Mantis on Jebel Jais, a pop-up hotel as well on the mountain, base camp and F&B villages, and beach clubs. So with the onset as well of the pandemic, the global hotel constructions industry suffered really severely. So there were delays in the hotel opening pipeline. We worked very closely with our hotel operators. We got constructions back on track. With the following openings that are scheduled this year, we will add to the destination around 2,000 rooms. So between Radisson, Hampton, Intercontinental, and Anantara and Movenpick, this year we will have 2,000 additional rooms to our destination. Next slide, if you don't mind. So this year, more than ever, I believe COVID-19 not only hit our industry hard, but it eventually affected all employees. Globally, the tourism industry is expected to lose 100 million jobs from our industry. We worked very closely with our hotel partners. We managed to save around 4,500 colleagues down here in Ras Al Khaimah. We made sure that we saved their jobs. And we did that through our stimulus packages. We did that by keeping the destination open for the domestic market, but safe at the same time. So I can say proudly here that Ras Al Khaimah can establish itself as the regional leader in sustainable tourism. We also work closely with EarthCheck, the global environmental experts. We co-created genuine sustainable practices with them, from reducing wastages to tourism area cleanups, scholarships with the American University of Ras Al Khaimah, and green procurement. Next slide, if you don't mind. So before I sign off and give it back to Chris, if you don't mind, I would like to leave with a general message about hope. And especially that this year I've been often asked how optimistic am I about the future, and I'll share with you the same answer I had last year. And my answer was always the same. In the face of adversity, we will always come back stronger. We will learn, we will adapt, and we will do things differently. And this is what COVID taught us to do. The appetite for travel will never leave. We will be ready to safely welcome visitors with open arms in Ras Al Khaimah, in UAE, and in this region. Thank you, and back to you, Chris.
Hey, that's absolutely wonderful. Thank you to Iyad, and thank you indeed to all of our three speakers there, giving us their overview. Thank you to everybody for your questions that have come in. And just as a reminder, if I can ask you all to use the Q&A function in order to ask any questions to our panelists. I'm sure, having listened to that in-depth overview, I'm sure many of you have got questions. Iyad, as you're on camera, I've got one for you straight away, if that's okay. And by the way, I particularly liked your comment about re-energizing aviation relationships, which I think is kind of really interesting. And it's kind of almost goes without saying, doesn't it, that actually if you haven't got airlines to fly guests and visitors into your region, then almost everything else you do is pretty irrelevant, isn't it? So I think that's really interesting. I've seen some marketing just this week around those links between Ras Al Khaimah and the Ukraine. So that's really interesting. The question that we've got is, what are your key source markets for Ras Al Khaimah until the end of 21? Obviously, we saw reference there to kind of Central Asia and the former CIS countries. Where are you focusing on?
Well, look, I mean, I will in 2019 and early years, UK, Germany, Russia, India, and Kazakhstan were our source markets. We do have secondary and emerging markets as well. But today, I mean, if you look at the world, I mean, countries that are recovered or traveling out from, you look at the CIS only, and a bit from East Europe, like Czech Republic and Slovenia. But Germany, we are receiving a bit from Germany and UK, but not the numbers that we used to. So that's why you see our focus are on that region. But as soon as we see a bit of recovery from West Europe, we'll be there. We never stopped. I mean, our rep offices were always on site. Even tomorrow we're having a virtual dinner with all our partners. Actually, I was surprised that events are back in London. So we're having all media and trade partners, but we will be talking to them virtually because of the restrictions of us traveling due to the 10 days quarantine. So I think till Q3, we will be focusing or depending a lot on the CIS, but Q4 is when we start or other markets start to recover and we see business coming up.
Okay, brilliant. Thank you so much, Iyad. And if we can zip over to yourself, Derek, really interesting statistics you shared there from the research that CAPA performed. What were you seeing on a kind of region by region basis? What did you pull out regionally?
Yeah, Chris, thanks. In terms of international air capacity, the market that seems to have performed best of late is the North American market, but that's purely driven by US, short haul holidays into Mexico and the Caribbean, etc. So almost exclusively driven by that sort of market. Second best is the Middle East Africa market, and then we have Europe and Asia lagging. We hope that we'll see a resurgence in European capacity in just in the next few weeks. Obviously, the European or the UK, I should say, green zones or green corridors, it's quite limited at the moment. And despite the excellent success the UK government has had with vaccinations, there's not a whole lot of places for summer holidays to go at the moment, but fingers crossed that does improve, and we'll see, particularly to other places in Europe on the continent and the typical sun holiday markets for the British travellers this summer, and that might help that market recover. Asia is the troubled child at the moment. It seems there's a lot of countries that had done well to date and are not doing so well now, and there are obviously borders and restrictions across the region. We all know the terrible plight of the India market of late, and it's just taking some of the potential recovery or hopes for recovery in the near term out of that Asia market. If you flip to domestic, perversely, Asia leads, but it's probably mainly driven by China and the domestic China market, which has recovered and is actually exceeding pre-pandemic levels in terms of capacity. Vietnam has also been a good market. Australia has come back of late. New Zealand has been strong throughout. So there's some pockets of growth or recovery, I should say, and indeed some growth within Asia. Next is the Middle East and Africa, just small domestic markets, however, so not really sizable from an air travel point of view. North America actually is recovering very, very well of late, domestically, driven, of course, by the US, and we're seeing the numbers going through the airports there in the US getting very close, actually, to 2019 levels just in the last weekend. So, we remain hopeful, again, driven primarily by visiting friends and relatives and holiday traffic. Business travel still seems to be down 75%, coming back, but still a long way to go for business travels, perhaps after the summer holidays and people getting back to offices that will trigger, the much hoped for recovery in that business travel segment. And then, domestically, the others are still struggling. Africa, Europe, well, not much in a domestic sense for air capacity anyway. Latin America struggling as well in domestic markets with the troubles in certain countries down there. So that's, a pretty quick overview of those markets. Certainly, the fact that we're talking about recovery and is a good thing, and we just hope that the next few weeks really we'll see a turning point for a lot of the markets, particularly in Europe, Chris.
Okay, brilliant. Thank you, Derek. And perhaps whilst you're on screen as well, Derek, we've got another question to do with premium economy. And I just wonder in many ways if I can bring in your statistic around traveller stress and essentially the feeling that travellers might be more stressful when they travel or when they get back to traveling again. Is premium economy going to help that at all? Perhaps seeing companies upgrading from economy, or maybe travellers demanding be upgraded from economy to premium economy to allow them for more space when they travel? How do you see that panning out?
Yeah, look, I think that, employee hesitancy is a key factor, one of several that we see sort of being perhaps some of the, disenablers of recovery. Whether that then translates into, corporations looking to book travellers up from economy into premium economy remains to be seen. I suspect, another factor that's clearly going to drive the business travel recovery will be travel budgets, and we are seeing pressure on budgets. CFOs are having a time of their lives at the moment, looking at the savings and have pointed to the fact that business has gone on. But I think we all know that that's not going to be a situation that prevails for long, as companies lose competitive bids to others, to competitors. I think employer duty of care is a very strong factor here, and insurance is a big issue for corporates. Just the rising complexity and cost of travel is another factor, and sustainability, and that was hot topic pre-pandemic, and I think it's going to come back. So there's lots of factors, as well as, of course, the big one, the borders, that are driving or putting some challenges in front of business travel. And I think that looking after travellers on the road and their well-being will be something that will drive some of those decisions. Whether we see, Chris, more down gauging, or what's the word, moving down the cabin from business into premium economy to reflect travel budgets, as opposed to moving up from economy into slightly better legroom, etc., for travellers and traveller well-being. I suspect the former more as a driver than the latter.
Yeah, it's certainly a double-edged sword, isn't it, for airlines? And Catherine, if I can bring you in, I know you made the comment a couple of times, which I think was fantastic, around what COVID seems to have done is actually accelerate some of those behaviours and changes that were happening anyway. We had a question about sustainability, just in terms of, is sustainability one of the, it's an awful term actually, but one of the winners, if you like, of a post-COVID travel era? Are you seeing, from a GBTA perspective, are you seeing sustainability feature more and more in people's needs and wants?
Absolutely. I think that there are a number of things at play at the minute. First is you've got initiatives on a government level where EU funding and subvention for the industry was tied to green initiatives. Then you've also got, from a sustainability perspective, you've got like 2020, if that's a baseline year with like virtually no travel, you know, people have seen the impact that that's had on carbon emissions. And certainly in recent events that I have attended, buyers are now talking a lot more about having, you know, carbon budgets and so on. And I think, you know, as we all know, you know, part of the big challenge for around sustainability is it's like understanding the you know, the environmental impact of your travel, you know, and having that in a consistent way, having that in a way that people can make an informed choice at the time of booking. And then the other thing is, you know, we've talked about the challenge around you know, budgets and financial constraints in organizations. And I think, you know, one of the things that we're really coming to, you know, as a conclusion is that it's only really going to have an impact whenever you have that senior C-level buy-in, and they recognize that, you know, if you know, you're balancing that financial cost of a trip versus the environmental impact, and being prepared to go for something that's slightly more costly, you know, but a more sustainable option, you know. But absolutely no question about it, it's certainly something that is high on the priority of our buyers. And you know, and you know, hopefully it will, you know, you've got that thing, the converging of different forces that will drive the change and help to facilitate more sustainable travel.
Okay, fantastic. Thank you. Thank you, Catherine. And that's the clincher, isn't it, for sustainability, whether people are prepared to pay more for a more sustainable solution, I guess. So we've come to the end of the session right now. I'm just going to spend 60 seconds or so just recapping some of the key messages that I've heard from our fantastic panelists. So we heard about the need to pivot, the need to understand, you know, from a destination perspective, understand what's business travel, what's leisure travel, what's everything in between, what your markets are, and be able to kind of flex, if you like, between those markets, domestic and international as well, of course. We've heard that aviation is critical to any travel conversation, quite clearly. And we've also heard a consistent message that travel will come back. There's certainly some differences, I would suggest, in when people think they come back. Derek, I think you have an incredibly optimistic group of subscribers and contributors in terms of, you know, the numbers that they're saying is that travel, if I've made my numbers correctly, something like 70% will come back by 20, or 70% of people, sorry, think that travel will come back to pre-2019 levels by 2023. GBTA data suggests that's a little bit later. The truth will come out on all that. We've also heard about things like employee hesitancy as we go through this project restart, if you like. So really just wanted to spend a second just to say thank you to everybody thank you to all of our panelists for their fantastic insight. Thank you to everybody that asked questions. We hope you got to most of those questions that come through. And just a reminder for everybody to also tune in and subscribe and join us on the sessions that we have a little bit later on. So without any further ado, thank you very much and have a great afternoon, everybody. Thank you.